making a move on the back of numbers. Let's take the conversation forward. Unmesh Sharma, Head of Institutional Equities at HDFC Securities, is with us on the show today. Unmesh, always a pleasure having you on the show. So, we straight want to dive in. Earnings is what it's all about. And my question is this. If you look at the way the market has reacted to some of the numbers that have come in, we had ICICI Bank. I don't think anybody could have found anything wrong with the numbers, but the stock was lackluster. Look at Kotak. I mean, the market was quibbling about net interest margin compression, even though the margin is above 5.5%, or Reliance for that matter. How are you reading through the bigger earnings that have come in so far? What's the takeaway for you? And is there a real disappointment, or is it just market positioning, which is why we're not seeing any sort of a major up move on the upside?
Okay. Good morning. Actually, that's the billion-dollar question at this point in time. Earnings have not been, with the exception of IT, earnings have not really been disappointing. But at the same point in time, the way in which the market is looking at, there are three things. One, is it driving any upgrades to earnings? Answer is no. The second is, if you look at valuations and where the market is sitting right now, including each of the individual stocks that you mentioned, all of these are really priced for perfection. So unless you get serious positive surprise, it's very difficult to see why the stocks will go up from here. And the third is, what you were saying about talking about positioning. All of these names that you've taken are all over-owned, very heavy ownership, both on domestic and the FPI side. If you look at from that perspective, is there any incremental reason that has been given by these stocks, or for that matter, positive surprise to be incrementally buying them? The answer is no. What we do think, however, will happen as we go into earnings season is that we are neither disappointed nor positively surprised, again, with the exception of the IT pack. What will start to happen is that the benefit that we have seen on the gross margin side for the small and mid caps will start to play through. So we expect that going forward from here till the end of the earnings season, you will start to see a little bit more positivity in there. But with the market priced at where it is, can we really see upside from here? Answer is probably not.
Unmesh, wanted to get your thoughts in on ITC. If you pull up, the last 6-month chart of ITC, you would see that the stock has done phenomenally well. This year, the stock is up close to about 40%. But this entire demerger rally of the hotel's business started around 430 thereabout, and it went all the way to that 500 mark. When the news came out yesterday, there was seller news, some disappointment about the structure, etc. But the stock has corrected from levels of 500. We're almost down to 460. Is this a good buying opportunity now for ITC, according to you?
Look, so, not that long ago, today someone pointed out very interesting to me. Actually, our consumer analyst and head of research, Varun, was talking about this in our internal meeting, as to how there was a gap between the market cap of levers and ITC. I used to be a consumer analyst myself a long time ago, and they used to be the same size. And they are now back to the same size, right? So one of the big alpha generation which has got created in the Indian market in the last 2 or 3 years has been ITC. Now, you split it up into two parts, okay? One is that while it's a very big company and there is a very large hotels business, in a sum of parts, the contribution is actually not even close to 50 rupees. It's actually in the teens, if I'm not mistaken, 10, 15, 20 rupees a share. So the whole demerger froth that got built up from, as you absolutely rightly pointed out, from 440 to 500 or so thereabouts was probably a little bit too much froth. Now that's come off. In this context, if you look at where ITC is positioned right now, with the demerger out of the way, at least from an inorganic side, is there incremental positive news? Answer is no. And if you look at the way in which the stock has rallied in terms of earnings comfort, while we do have an ad rating on the stock, is there significant earnings upside? Answer is probably not. So from that perspective, we'll probably get returns which are closer to the earnings compounding, which I think is going to be high single digits, early teens. So that's the kind of positioning that you would take. So if it's a part of your portfolio, you continue to hold from that perspective, given where markets are. But incrementally, is there any reason to use this dip from 500 to 460? This removal of froth, so as to speak, to buy the stock? Answer is we are not in that camp.
Interesting. Unmesh, what's your target price on ITC? Would you remember offhand?
Honestly, I don't, but it's around about where we are today. Yeah.
Okay, it's around CMP. Got that.
Yeah. No, there is. I definitely know it's not significant upside from here. That I remember.
Okay. All right. Sure. So let's talk about, where, if at all, you do see the potential for a re-rating or upgrades or any positive surprises. We still have a lot of major companies ahead, right? Today is going to be Bajaj Auto. We'll hear from Asian Paints as well, and then a couple of others. Bajaj Finance, I think, is tomorrow. So it's still several biggies left on the table. Do you expect any of them? I mean, let's say if I were to ask you, what are the 2 or 3 companies you're really watching out for this season in terms of the possibility of a surprise? Would you have any names on the list?
I think possibly the only ones where we were... Okay, let me take a step back and answer this in a slightly different way. With the market at near 20,000 and our full year earnings estimate ex oil and gas of around 12 or 13% growth for the EPS, we are actually a little lower than street anyway as a starting point. So, and that has actually converged because we were at 12% growth for the year ex oil, and the rest of the market was like 18, and then it's come off to 15, 16. We are still below that. So in this earnings season, while we are not expecting significant downgrades to come through, we were not looking at significant positive surprise from companies as a whole. What we were looking out for, whether there would be any disappointment on the NIM compression, that has not happened. So from that perspective, what we are looking at is there are some individual consumer names where we want to see what happens on the margin front and things like that. But broadly, we are not expecting something very exciting to happen from here till the end of the earnings season.
Okay, thank you very much for joining in. That's the view coming in from HDFC Securities. By the way, SRF